morning. You're watching The Market right here, Nifty now with me, Ashraf Faridi, Avan Dabash, Nikunj, Dalmia in the studios. And for our markets, we're looking okay. Yes, we're consolidating a little bit, ebbed off a little bit as well. Considering there were key heavies like a DRL, L&T, they were all weighing heavy on the markets. And similar was the case with pretty much the entire metals pack. Even though Novelis' performance was in line, that refused or rather failed to rub off on Hindalco yesterday. But this morning, a fresh set of concerns, I must say, on the US debt default. Those concerns are the ones which are really plaguing the markets, at least Wall Street this time around. Why is that? Because the US government has been debating raising the debt ceiling. The IMF has already warned of serious repercussions if that were to happen and if the US defaulted. Jamie Dimon is saying that he's warning now panic will overtake markets. So just a quick snapshot of how the global cues were overnight, and the handover was a little bit weak. I mean, the Dow was down about 220 points, mildly soft for S&P 500 as well, and just marginally flat in the green for the Nasdaq. This morning, Asia as well is pretty much all over the place. It's a mixed bag with definitely a negative bias, and that's pretty much the case with the SGX Nifty as well. It's down about actually 0.4%, so just about holding on to that 18,250 printing range.
Yeah, Aisha, got to click in my neck so got to look straight.
Yes.
So just one of those days there. No, look, my sense is very simple that the US debt ceiling, while right now it is important in terms of news, it's happened in the past also where the US debt ceiling had effect. I mean, the US, because of, political yes, no, and I don't know, where the Republicans are blaming the Democrats and Democrats are blaming the Republicans and everybody was blaming White House. The US debt ceiling has been a challenge in the past as well. But honestly, it'll go through. It may have it will give near-term concerns. It will have anxiety moments, so to speak. But from really a market standpoint, I don't think this is something which is going to be a prolonged problem. Today, markets will talk about it. Tomorrow, market will consider the importance of it. And I think sooner than later, everybody understands the importance of the US debt ceiling, which could have an impact on the system per se. So I think from a market standpoint, this would be a headline which will keep us busy, but this is something which will not have a very large or a sizable impact on markets per se. That's my point.
In fact, here's what Jamie Dimon is actually saying. He's saying, if we can just bring up that quote from him, that markets would be gripped by panic as the United States leads towards a possible default on its sovereign debt. He's saying that an actual deficit will be potentially catastrophic for the US. He says we need to finish the bank crisis. Whatever the FDIC, the OCC, the Fed, whatever they need to do to make it better, they should do.
Okay, that'll closely be tracked and we'll wait and watch as to what exactly happens by the 1st of June. That's the US government's deadline to raise that $31.4 trillion debt ceiling. Moving right on, as you were talking about, Aisha, our markets, there was an earnings drag, but despite that, we did manage to hold out resilient. So close to the 18,300 print yesterday, it was the small cap index actually that managed to outperform with a gain of about 0.5% or so. But interesting that we've been gaining for 3 straight days on the trot, and yesterday we put the brakes on that gaining streak. But the FII move has been absolutely commendable, resilient for 11 straight sessions. In fact, it's been the longest buying streak since the 14th of November 2022. So that FII trend, Nikunj, has been clearly supportive for the equity markets, and despite the earnings drag, we held out.
Avan, I think you had a very good April and you had a good May. It's entirely conceivable that markets may just consolidate here. Nifty may go back to the lower support levels. You may see a little bit of mid-air turbulence because suddenly the global mood, in a sense, is slightly on the back foot. So I think it's a time where markets could consolidate, and it's very healthy because what you don't want is that you don't want a linear move in the market, because in a linear move, whenever there is linear move in the market, excesses always get built up. But I don't expect the until unless something really goes wrong at in terms of a global risk-off moment, I don't think markets, even if they consolidate, the bias I think would be positive, because the more the markets will consolidate, the temptation to buy into mid and small cap stocks will always increase. See, that's how markets always move. First, the rally will start in benchmark indices, then the pivot index, which is the bank Nifty, then the ranked mid-cap stocks, they start outperforming, and then it's essentially the small, and then some of the frothy names, they start rising higher. I don't think we have reached there yet. If you really ask me in terms of the duration of the rally, I think we've crossed the midpoint, but we are somewhere not, we are 60 to 70% of this rally I think is done. But the last hurrah, which is where you will see big price action and a serious price surge in some of the mid and the small cap stocks, I think that's not over. For example, railway is the only pocket where we've seen a huge price surge. I expect in the month of May or in early June, that last hurrah is still left. That last hurrah may not be in Nifty, but the last hurrah in small and mid cap stocks is left. Because if Nifty will consolidate, what will a trader think? Arey, market theek hai. Let's start buying. And I think that let's start buying FOMO, left out syndrome, catch me if you can, any other word? That small cap and mid cap rally is not done.
Yeah, absolutely. And we were chatting with Sandeep Tandon yesterday, and he said, yes, the markets are closing in on an all-time high. Yes, the FII participation is back. But he said, you know what, the HNIs and the family offices are completely away from the market. No one's actually happy on the street. And I guess some of it can be seen in the kind of SIP inflows that we've seen. It's a stark dip from the month of March, what April's clock.
See, I think there are two things here. One, there is a year-end and beginning of the year allocation change which always happens. So March, April will always be different than what the previous months are. But it's still a sizable number, and it's an impressive number of about 13,000 crore. SIP, if you've invested in SIP from last 2 years or 2.5 years, it's not been a very gratifying experience, because equity as an asset class has not generated superior return. So typically what happens when markets they start coming higher, Aisha, there are a lot of folks who say, okay, we're reaching our break-even points again, or we are reaching our entry purchasing price, should we get out? So you would actually see that adjustment happening. But the challenge is that if mutual funds, they do not give returns, and if they continue to underperform benchmarks, then this entire SIP bulge and surge automatically will come under question. So you definitely want mutual funds now to really come back with rewards of outperformance rather than just charging commission and underperforming.
Yeah, absolutely. Okay, let's take it back then to the global commentary and all the concerns around the US debt ceiling. In fact, Anisha is waiting by, and she's been scanning all the global commentary coming in overnight. Anisha, what does it say?
Oh, well, yes, let me start with the comments coming in from the U.S. Treasury Secretary Janet Yellen, and she again talked about the U.S. debt ceiling, which is fast approaching. She spoke, of course, at the G7 meeting, which is underway in Japan, but she says that if they really hit the default ceiling limit, it would also risk undermining U.S. global economic leadership and raise questions about their ability to defend the national security interests as well. So important commentary coming in there. Jamie Dimon, too, of course, spoke about how there will be a lot of panic ahead of that, but specifically on the banking crisis, he spoke that they need to finish the banking crisis, whatever the FDIC, OCC, Fed, whatever needs to be done, but they need to do it now, otherwise it might just, the contagion effect might get larger. So that's the important commentary coming in from him. US Fed member Kashkari said that inflation outlook was keeping him up at night. Even still, he believes that inflation has been really, really persistent. Yes, it's coming down, but it's been something which has been very sticky, and he believes it will take a long time for inflation to come down. And as a result of that, Fed will have to continue the tighter monetary condition. That would mean the short-term yields would be higher than the long-term yield. And this yield inversion is something which is something very difficult to deal with the banking system as well. So this is what he points out. And lastly, I want to point out what Elon Musk has to say. Finally, it seems like the Twitter is getting a new CEO. He says that he's excited to announce that he's hired a new CEO, and she will be starting in 6 weeks. Of course, the official name is not out, but reports suggest it could very well be NBC Universal's Linda Yaccaroni.
Lots of interesting global commentary. Thanks very much, Anisha, for being on top of that. Let's move right on and get on board Anurag Singh, managing partner at Ansett Capital, to talk a little bit more about all that's transpiring across the globe. Good to have you on board. And Anurag, let's take off from what Jamie Dimon said, that a possible default on the sovereign debt, an actual deficit, would be potentially catastrophic for the US. Your views?
Avan, good morning. Look, obviously it's a problem. The last time it happened was 2011, and guess what the combination was? Obama had just lost the Congress to the Republicans, and the moment it came to that heated battle, the default happened. I think if ever, I don't want to scare people, this is a Friday, but if ever there was a chance that that can happen again, it is this Congress, because the two parties can't be farther apart than they already are, and Biden's strategy is to just push it to the wire, forcing Republicans to do it. But I think there is a serious rethink that US needs to curtail its expenses. So I think there is a serious opportunity. Both sides think that they can blame it to others, especially the Democrats, but I think it is going to be a tough one. I would like to stay on the sidelines, and I think so are many players on the market. The more we move closer to the edge, Avan, this time, it's not like they will do 11th hour deal. It looks really difficult, especially the position that McCarthy is in on this. Yeah.
For the first time, I mean, if you take the clock back, it has happened earlier also, where it was political stalemate, and US government, they, I think, had to shut operations or business for about a week. I mean, nobody wants, whether it's Republicans or the Democrats, nobody wants US, their country, to default.
Yeah. So Nikunj, point well taken, but here is the point. I think the politics has become so complex that it has become very easy to just kind of put the other side on the dock and not take any of the blame. You see the commentary which is constantly coming from Biden administration, that they all kind of point to softer issues and not really explain the economics of the whole thing well. I'll give a small pointer, Nikunj. We're talking of inflation, and Fed is all the while trying to fight inflation, and unemployment is at an all-time low. Biden has been keeping a moratorium on education loan for about more than 2 years now. Now, what is the situation that you are not allowing 50 million people to pay on the education loan, and you are paying that through the interest from the government? That's also keeping the inflation high. So I think this government, we know that Democrats are a spending government. They are left of center. And I think this time there is a serious risk. And we don't know who will blink, right? But chances are more and more people are saying that this time it's going to be a significant one. We don't want US to default, but it might be an interim position. I am aligned with Jamie Dimon. If he's surprised, then I think we should all be scared.
Rag, really appreciate your time. Just one of those phases, I guess, where the Democrats are blaming the Republicans are blaming the Democrats, the Senate is not supporting the Congress is not supporting the Senate, and guess what? Everybody is blaming the White House, which is what Anurag just said, that Biden is just not able to perhaps communicate the message that what is the importance of US debt ceiling. See, let's break it for our viewers. What is US debt ceiling? US debt ceiling is nothing else, but it's a bill which needs to be passed by the parliament. If the bill is not passed by the parliament, the US government cannot raise more debt. If US government cannot raise more debt, how will they pay their obligations of debt? So that technically means that US will default. Now, will US default? If US defaults, then trust me, the world is going to be very, very different. Has it happened in the past?
Recession, fears of job
No,
loss,
I mean, US
higher
defaults, then what is the virtue of a 10-year paper? What is the biggest commodity? What is the most traded instrument in the world? It is the US 10-year paper. Every time there's scare in the world, what do you say? You want to go back to the US Treasury, right? Central bankers have money in US Treasury. Everybody has investments in US Treasury. So if the value of that bond is zero, then technically there is going to be catastrophe in the financial market. B, has it happened in the past? Of course it has happened in the past. What were the implications of that? Well, in the run-up to the debt ceiling, a lot of yes, no, I don't know happened. US government had to shut down, I think, business for a couple of days or maybe a week. I think it happened a couple of years ago. We'll have to go down the timeline. And then eventually it has to go. It went through. So I think a similar factor really could be at play. High anxiety moments, some tension, maybe a lot of volatility, a lot of yes, no, and the blame game will continue.
Right. Okay, the SGX Nifty this morning indicating some more red for us. So let's see what the day holds out for us. But here's Venugopal Gare, MD at Bernstein. He sees scope for financials to give positive returns and the contribution of financials in the index to improve further.
See, but the reality is that financial sector is, waits, or rather the contribution to the index will eventually continue to improve through the year because there is still certainty in terms of growth. And number two is certainty in terms of, their asset quality. Now, this is very, very different from what it would probably have been even 2 years back or 5 years back. I guess that will probably bring in a return of interest in financial sector as well within the broader construct of credit growth, sort of being, let's say, in the 12-13% range, broadly from a system point of view for this year, lower than what it was at the fag end of the previous year. And more importantly, of course, name speaking and potentially seeing some correction. All that construct yet, I think there is still room for, financial sector to sort of deliver positive returns this year.
All right, let's talk levels, let's talk fresh stock recommendations. And for that, our chartists are joining in, Naresh Marani and Kunal Bothra, who's with us in our studios. Kunal, let's begin with you then. We did put the brakes on that 3-day gaining streak. What is this indicative of and what levels are you tracking?
Good morning, Avan. So yesterday's data point was clearly in the favor of options writers, where there was huge amount of call writing at the 18,300 strike, and that's where the indices closed in just about that flattish line at the 18,300 mark. Now today it could be very interesting because start of a fresh week or a weekly expiry, we tend to expect that a particular previous strike, which was a major hub of call writers, could probably have the similar stance on the indices. Now what matters over here is the first half an hour, first 1 hour, whether we actually open down 70 points, 75 points on the index, or we manage to just recuperate some of the losses or the initial losses and come back closer to that 18,300 mark. That could really determine the texture of the markets for the rest of the day. So I think 18,300 would now act as a major pivot, and the higher we are about those levels, 18,300, the better the market texture could probably improve. But if we are significantly below the 18,300 mark, say for the first half an hour, 1 hour, then there could be more additional pressure for the index at least throughout the day.
Well, it's a sea of red all across Asia as well. Naresh, hi, morning. Yesterday it was largely L&T weighing heavy on the index. Do you see some more pain for L&T and perhaps the metal sector too?
So I would expect the L&T to reverse from the 2200 band. So not much left at 22, 40, 50 levels. So another percentage or two and that it becomes a good buy zone. So overall, not looking much from an L&T impact because the whole capital goods segment is still doing really well. Metals have continued to be in a sideways to a downward trend selectively, and every metal stock is doing a different move. But in that case, not very bearish as such over there as well, and they have a very low weight on the index, so would not make the index much of a move. Overall, the view remains same. We get into a newer base. 18,200 crossed opens up a move to 18,600. The new base could be closer to 18,000 now. Yesterday was a day where the broader market still did better than the indices. So today we'll need to see whether the broader market momentum continues. But overall, the trend remains positive. It's a buy towards 18,000 if we dip there over the next few sessions. If we get an opportunity closer to 18,000, 18,050 is where you want to buy into the Nifty.
Okay, let's find out what those top recommendations are. And Kunal, what's catching your eye today?
So I'll go with the first contra buy on ABFRL. I call it contra because the stock has been beaten down significantly. The stock closed at the low point of the day yesterday as well, just about that, just below that 200 levels. The reason for suggesting a buy is RSI divergence, which is clearly spotted on the hourly charts and by a decent margin for the stock price. So expecting a near-term bottom formation for ABFRL, suggesting a buy with a target of 216, stop loss at 193. And HUL is the other stock which is relatively low beta, defensive in nature. The stock has given a swing breakout on the daily charts, coming out after a bit of negative sentiment as well as price action on the downside. So would suggest a buy on HUL, targets of 2750, stop loss at 2500.
Right. Naresh, what's on your stock radar?
So first is the buy on Axis Bank. Maintain the stance that the stock is setting up for a leadership move. The stock has made a base around 820 levels. Yesterday also the stock tried to cross that 895, 900 mark. For the extreme short term, 860, 870 is a very strong support. So keeping a stop loss at 875 and a target price of 970 in the near term. Looks interesting for the short term as well as the medium term. Second is a buy on Coal India, which is knocking in that range of 238 to 240, which is the recent swing high, and also on a dividend adjusted basis, that would be an all-time high again if we cross that. After the gap down 3-4 days back, the stock has made a decent recovery. Expecting it to cross above the 240 mark and make a quick move to 255. A stop loss to be kept at 230.
Right, okay, let's move on and let's shift focus and look at Indian Hotels Analyst Day takeaways. While the EBITDA margin target has remained stable at 33%, analysts believe that the highlight was the guidance for Ginger Hotels. Sharad is here with the key takeaways. Sharad?
Well, yes, Indian Hotels is in focus, and the management has stated that the EBITDA margin would be a constant guidance of almost 33%. Now, the tone itself has been a very prudent tone by the management, and they've stated they're factoring in inflation as well as portfolio investment, and of course the management fees that is expected to go up by almost 150 crores to almost 650 crore rupees. And the highlight has been the Ginger Hotels commentary. They have stated a 600 crore top line is expected to kick in, while a 250 crore contribution would come in from EBITDA, and this brand itself has the potential to actually increase the operational margins between 50 to 60 odd %. Now, looking at the operational numbers, also the revenue per room, the RevPAR is what we call in the hotel industry, that has gone up by 11% on a year-on-year basis for the month of April itself, and the trajectory is expected to go up, especially because of the premiumization of the portfolio. And apart from this, the company has stated that there are plans are afoot to introduce a new brand into their hotel portfolio. However, the prudence kicks in, and over here they have stated that the mergers and acquisition cannot wane in the expense of the balance sheets. Now, overall in industry also they have stated that the current demand is growing at 7%, while the supply range is between 5 to 5.5%. So overall the tone of the management is still cautious, but on an optimistic way.
We leave it at that, and let's talk about MSCI review as well. Max Healthcare, HAL, Sona BLW, they could all see positive trigger coming in the back of the inclusion into the MSCI index, while two Adani stocks could see some outflows. Let me take it across to Somit and get the full lowdown on the rejig. Somit?
Well, the outcome of the May review is finally out, and 3 stocks will be getting added in the MSCI index, and one of the stock is a surprise here, and that is Sona BLW. None of the analysts in the street were expecting this stock to get included in the index, but MSCI has added Sona BLW in the index, and the inflows expected in this counter is to the tune of close to $175 million, which is nearly 9 times its 20-day average volume. Apart from this, Hindustan Aeronautics and Max Healthcare will be added, and this is on pretty much on the expected lines. On the outflow side, or the stocks that are getting excluded from the index, the names are on the expected lines, that is Adani Transmission, Adani Total Gas and Endastars. Now, Kotak Mahindra Bank, now that bank's weightage in the index is expected to increase, because of which there could be an inflow of close to $800 million, which is nearly 9 times its 20-day average volume, and the total net inflow because of the MSCI changes is expected to be around $1.3 billion, of which 800 million would be only for Kotak Mahindra Bank. Apart from this, Maruti Suzuki, ONGC, Zomato, Indigo would also see some inflows because of weight increases, while some stocks that would see outflows because of reduction in weightage, the names are likely Reliance Industries and Infosys, which would see outflows of more than $100 million. Apart from that, there is a Sri Cement, which could see an outflow of only 40 million US dollars, but given the low volume, this amount is nearly 5 times its 20-day average volume. So keep an eye out for these stocks. Apart from these stocks, there are a host of small cap names that are also getting included in the MSCI small cap index. Nearly 14 stocks are getting included there, and 9 of them are getting out of the index. So keep an eye out for these stocks in trade.
Thanks very much for giving us the latest on that MSCI quarterly rejig and the stocks to watch, Somit. Moving right on then, Zensar Tech delivered a good set of numbers. The profit growth was aided by sharp expansion in margins. Let's take it across then to Anisha, who joins in with all the fine print when it comes to the earnings. Anisha?
Well, a very strong set of numbers coming in from Zensar and pretty much continuing the trend that the mid-cap IT has managed to outperform the large-cap peers by a whole lot. Look at the solid performance coming in on the profitability. A 56% quarter-on-quarter jump coming in on the profits, and that's been led by the margin expansion. A 320 basis point margin expansion is what the company delivered in this quarter, and it has come in at a 7-quarter high this time around. The deal bookings was also strong, which grew by 34% on a sequential basis. Attrition declined by as much as 300 basis point, and going
Hindustan Aeronautics and Max Healthcare as well, by the way. Naresh, let's just quickly look at the charts of HAL and Max Healthcare.
So they are both stocks which have been trending well. HAL has been a classical uptrend right from the time it broke out about that 1400 mark, making higher tops and higher bottom formations. Even in the near term, the stock crossed that 2900 mark, which was the top in March. So out there, the next target would be 3200 to 3400. So the trend still remains extremely positive here. So positive on HAL in the near term. Max Healthcare has been a slow and steady uptrend relatively, and that has been the case with most of the hospital names, healthcare names. The stock is on verge of that breakout 450, 470 multiple times, but it has failed. So hopefully this time could be the place where it breaks out and goes towards 500, 550. But overall, 430 is a strong support for Max Healthcare. So whether it gets into a momentum move is difficult to call, but the trend is a slow and steady one, which is up.
And focus in on the stocks that are on the editor's radar today. Well, it's result candidates, and the two heavyweights are the ones that we're zeroing in on. So let's begin then by talking about Tata Motors, and what a move it's been. Nikunj, I bet you're thumping the table saying we told you so. But yes, 4% away from its life highs. And of course, when it comes to numbers, we'll be watching out for a lot of factors, GLR performance, dividend payout, etc. But what's the view on Tata Motors?
You know, it just could be one of those phases in the short term. When I say short term, couple of days, right, where Tata Motors actually could sell off, could see a sell off post the numbers, because the run up has been strong. Nothing in the environment has changed so dramatically fundamentally, which really supports such a sharp move in Tata Motors. The GLR concerns are still there. They're doing very well in passenger car market that we knew a year ago. Tata IPO subsidiary IPO was coming. That's a passé 6-month-old story. They are getting market share gained in CV. Everybody knows that. All these factors were at play 2 quarters ago. Then what has changed in this quarter? It's only recognition that Tata Motors is suddenly offering that value. Now that recognition has to be always backed by numbers. So numbers will always come with a slow pace. And numbers in last 2 quarters on GLR front have been decent. We pretty much know that it's no longer the albatross, so to speak, for Tata Motors. So I don't think incremental changes will come in Tata Motors, and because the stock has seen a run up, it's a trader dominated stock. That's how the margin trajectory for GLR has moved. 6 is not going to become 8. So this bump up of 2.5 to 6 is something markets know. Little bit of disappointment here. And given the volatility in Tata Motors stock and the beta nature of the stock, you could be in for a buy the rumor and sell the news kind of a trend.
Okay, so this one is going to be closely eyed. 511 is where the stock is at. Moving on then to Pharma, Cipla in the spotlight, and seasonally it is a bit of a weak quarter when it comes to Q4. Generic US sales numbers all will be closely eyed. What are you penciling in for Cipla?
So you must look at a very different number for Cipla. And for Cipla, I think it is the India number which is important. And we've looked at all the pharma companies where India component is large. And for companies where India component is large, the India component to India business has managed to beat expectations. So India is where growth is, India is where high per capita spend on medicines is moving. The generic is now taken over by branded, and Cipla has a formidable market share. They have a formidable market share in respiratory market, the diabetes market, and also in some chronic care. So I think for me that becomes an added bonus for Cipla, where the domestic market could surprise us, unlike in case of Dr. Reddy, where the global business was under pressure. Also Mankind Pharma. 97% from the domestic
Majority,
market.
yeah.
That sets the benchmark as to how you want to value a global business. This could be the dark horse, I think, for rest of the year. I think it is expensive, so it does not get this kind of recognition because it's Cipla is one of the stocks because it's been consistent after the COVID bump up. So
Yeah.
it does not get that kind of a recognition because it is not cheap. But I think gradually the way things are moving and what Umang is trying to do, you may start seeing evidence of that in this quarter numbers, and especially on the domestic front.
Okay, and after the terrific year that it had last year. All right, Cipla and Tata Motors, Aisha, would be interesting to get our experts' take as well on these two candidates.
Yeah, absolutely. Tata Motors scaled it up all the way to that 511 mark. Sandeep, continue to add positions to Tata Motors. What's the call?
Yeah, so I think Nikunj said, I would agree with him that we need to watch out for the results because the results can create volatility. So if results surprise on the upside, it still remains underowned stock among institutional investors. So that could create a fresh wave of buying. And if the results disappoint, then we could see a small downturn and then a phase of consolidation. So I think for many of these companies which move on expected turnaround in fortunes, the results become very important, and that's the case with Tata Motors.
Sandeep, the other thing is, what do you do now with cap goods as a story, right? Siemens, I'm just looking at it. The numbers came out yesterday. Strong numbers. Revenue uptick of 28%. Margin uptick of 40 basis points. We were chatting about ABB as well when the numbers came out. Good performance there. But then there is L&T as well, wherein the guidance hasn't quite met what the street was anticipating in terms of order execution. Do you continue to add positions on L&T if it falls further?
If it falls further, yes. So I think that was always the case with LNP, and that's what we were discussing prior to the results. That after this kind of run up, the results become very important. So if the results are not as great, we'll see some correction, some phase of consolidation. But because the longer term pictures improve so much in terms of visibility of growth, so then there'll be a time when it will again come into a range to buy, and I think a year, 2 years later, the stock will be much higher from the current levels. On the other hand, we've seen ABB, Siemens, these kind of companies, because of the pure capital goods nature of their businesses per se, unlike L&T, which has a lot of EPC. So they have done very well. They have also been doing more higher value products, and that's adding to their margin. So that's the reason they've been doing much better. Now, the question out there again comes because of valuation, because the stocks are now trading at 50, 60 times next year earnings, which becomes a bit tough to justify. So we should not call a top in these stocks, but we should not expect that they will continue to zoom up. I think they need to go through a longish phase of consolidation.
Sriram Veludim joins us now. He's head with Alternative Research, IFL Research. Sriram, good morning. Thank you for joining us. Can you analyze the net impact of the MSCI rejig and what it means for Adani Group of stocks?
Yeah, hi, very good morning. Index provider MSCI announced the changes relating to the May 23 index review today early morning. Largely, the inclusion list was in line with our expectations, with an exception of Sonacom's. Sonacom, the street was not expecting an inclusion. It was not factored in. Max Healthcare was there in our list of inclusion. In fact, it was an anti-consensus call. Hindustan Aeronautics was another name which the street was expecting an inclusion. In case of deletions, the index provider has decided to delete Adani Transmission and Adani Total Gas. In terms of and Indus Towers as well. In case of Adani Group of stocks, in case of Adani Transmission, the net outflow is to the tune of $190 million, while in case of Adani Total Gas is $170 million. Earlier this week, the index provider had come out with an announcement of reducing the foreign investment factors in both these stocks, but subsequently what has happened is the index provider has decided altogether to delete both the names. So there are several weight ups as well as weight down as well, which is which is not there in, which is not factored in. In case of weight ups, we have Kotak Mahindra Bank. This was a well flagged weight up event, almost to the tune of $750 million. Other stocks where a weight up is expected are PSU names like ONGC, Power Grid, NTPC. Siemens will be the non-PSU name here, and Ultratech and SBI Cards. So these are significant in terms of ADV. In case of weight down, we have the high impact ones are JSW Steel, almost 7 days of volume impact, Shree Cement, 5 days of volume impact, BPCL, Hindalco, HPCL, and Dr. Reddy's. So all these names will see a weight down in the May index review, and the impact is almost to the tune of 1.5 to 3 days. So all these adjustments will take place on May 31st.
Which stock will see the maximum outflow and inflow? Can you just mention it again?
Sure. So in terms of inflows, maximum inflows, Kotak Mahindra Bank is the one that is expected to see maximum inflow to the tune of $770 million, which is almost 8 days volume impact, followed by ONGC, which is roughly $75 million, which is 4 days of impact. Indigo, 3.5 days of impact, $60 million. Siemens, $45 million inflows, which is almost 3 days of impact. And then Power Grid, $50 million inflows, 2.5 days of impact. In case of weight down, JSW Steel will see the maximum impact of 7 days. The outflows are to the tune of $75 to $80 million here. Shree Cement, $40 million outflow, 5 days of impact. BPCL, $37 million, 3 days of impact, followed by Hindalco and HPCL. Hindalco is $50 million, 2 days of impact. HPCL is $20 million, 2 days of impact. So these are the significant names on the weight up and weight down front.
Sriram, great to have you on the show. Thank you so much for, analyzing the MSCI rejig and what it would mean in terms of inflows and outflows. Clearly the highest inflow for Kotak Bank as well as followed by ONGC. You know what? We're going to take a very quick break, come right back in 30 seconds and we'll continue our chat with Sandeep Sabharwal.
Stocks where we've seen a significant amount of breakdown or I would say that bearish price action. And one of them, Naresh, is Hindalco. Has a tight turn for Hindalco, Naresh. It's gone below 200 DMA. It fell on strong volumes.
So the stock has actually been a tepid one all through the last few months. The initial recovery was very strong from 300 to 500. Since then, it's been a slow and steady downtick. The recovery also recently from 385 to 445 was laborious, not really a strong one. So again, the tide seems to have turned down. We go back and test that 380, 390 mark, and then we look at it whether it can hold around that 380, 90 mark. If it can hold, then maybe we have some sort of a basing out formation going forward. But overall, the trend in metals has been very selective. You have a couple of names only on the steel side doing well. Aluminium has still been sideways to down. So Hindalco still looks a little weak for the near term. Target price would be 380 to 390 on the downside.
Sandeep, I'm looking at AMC stocks. None of them are doing well. I look at Angel Stockbroking, nowhere close to its peak it made. ICICI Securities below the 200 DMA. The Indian market is doing okay. SIPs are still there. More and more demat accounts are opening. Merchant bankers are getting the deals. IPO market may not be vibrant for the quarter gone by, but if markets stay where they are, IPO markets will make a comeback. Is it a good time to, let's say, buy an AMC stock, or if not an AMC stock, maybe like a platform company like ICICI Securities or Angel?
The issue with both these businesses is that margins are declining. So from the AMC standpoint, also a series of actions by the regulator has led to lower margins. On top of that, most of equity funds tend to be the biggest sort of income generators for these AMCs, and last couple of years, we've seen a significant underperformance coming in out there. So there's been a shift from the growth of many of these AMCs. So one newer AMCs have taken a biggest market share. Secondly, we've seen that money is moved out from mutual funds to other investment avenues. And on the broking side, I think it's a question of, I think, the margin, the price war is becoming even more intense and could become big. One, the intensity could further increase going forward. And the trading volume jump up which happened post COVID, I think that's also starting to moderate. So I don't see any big value per se. So AMC stocks, we can say they are in value zone just because they've done so badly and valuation are not as expensive. But growth triggers are not.
Somebody is of the view that Indian stock markets in 5 years, from here to next 5 years, the financial inclusion will increase. More demat accounts will open. The markets, if the earnings growth is anywhere between 12 to 13%, you will see that kind of a, that kind of an uptick even in benchmark indices. The wealth of the stock market will grow. New investors will join in. Then what is the best way to bet on that?
The best way is to identify the growth companies which will capture this and where valuations could still be reasonable or even valuations are a bit stretched. So over time, because they do so well and they have some productivity improvement or market share gains or can capture new opportunities overseas, etc. So I think that's the way to participate. I don't think the way to participate is to bet on broking or AMC stocks.
Sandeep, what's the outlook when it comes to Siemens after its quarterly performance? It has been very robust. Profits and EBITDA came in above what the street was as well penciling in. And even the management commentary, at least from the global CEO on India, has been fairly optimistic. Your views?
So I think the critical things here are one, these companies have limited liquidity. So what happens is that the liquidity is not going to increase and the older investors are not going to sell because the outlook is so positive. And they are outperforming so much in terms of delivery versus expectation that gives a valuation, a price cushion. But on the flip side, the valuations have run up so much that the valuation of particularly Siemens is, I think, more than 55 times next year. It's not even this year. So to that extent, the investors need to decide what valuation you need to give a company. So I think it's a valuation headwind now rather than a fundamental headwind.
That's the view coming in on Siemens. In meantime, let's also get in a take then on some of the stocks that have been on the radar and largely on the back of a breakout or a breakdown. Naresh, wanted to get in your views then on Teamlease as well as Quess Corp. Both saw a breakout in yesterday's trade. What do the charts look like?
So as of now, both these names are one-day move, given that the stock has corrected almost more than 50-60% from the top. We saw a similar spike up back in November, did not last. So hopefully this one could be a little more lasting, but it's tough to take a call whether the bottom is in place. At least today's move could be an indication that bottoming out process could be starting. So same is the case with Quess Corp also. We've seen promoters buying into the stock, etc. The stock saw a spike up back in March and also did not rally as much, but at least out here there has been 4 months of consolidation. So yesterday was a 5x to 10x volume trigger for both these companies. So a bottoming out process could be in place. Whether we start a bigger uptrend from here is tough to call. So if one has a positive bias on the stock, on this sector, one can go in because the sector has corrected a good 60% from the top and now starting to make price and volume action. But in terms of trends, the longer term trend will still take a lot of time to change. So unless one has a positive fundamental bias, it's difficult to take a trade here.
Okay, there you have it. That's the view coming in on some of those smart breakout candidates. Moving on then, top fundamental stock ideas. Hemang Jani shares his views on Zomato, saying he's bullish despite what he says has been the ONDC phenomenon, which is perhaps too early to play out.
Stage, does it have the enough scale to really create a big disruption? We don't think so, unless there is enough traction in terms of client base. They expand categories, grocery, and many more. We don't think that this particular issue is going to be too big in terms of the impact. But since the market is far more sensitive, it has already started pricing this in. And as we see incremental data over the next, let's say, 1 or 2 quarters, that will clearly suggest what kind of impact it would have. We have an extremely positive view on Zomato. We just did initiating coverage report, and we think that that market size is big. And once the company achieves a certain operating profit level, the overall growth can be extremely high. So we are not disturbed by this ONDC phenomena as yet.
Breakdown in Hindalco, breakdown in JSW Steel, breakdown in Go Fashion, breakdown in Manyavar, that is, Vedant Fashions. Sandeep, where do you see some of these haloed niche consumption names moving for rest of the year, whether it is Vedant or Campus or Sulla or Ethios? I mean, these were the go-to stocks. The word everybody said that it's a K-shaped recovery. And in a K-shaped recovery, luxury will do very well. Niche consumption pockets will do very well. Indians will buy more watches. Indians will consume, from beer to wine. There are more weddings, which means more wedding apparel, wedding-related apparel will sell. What happens to some of these haloed stocks now?
I think it all comes down to valuation versus growth. So I think, for example, something like Campus went up to more than 100 times earnings. 100 times earnings are not justified for any kind of growth. And to that extent, we've seen a significant sell-off, and even now it's at 50 plus. Now it needs a significant growth uptake for these valuations to sustain. Same is the case with many others. Vedant Fashion, it's a good company. It's dominant in its spaces. It's moving from men to women sort of occasion which is a much bigger market. So their success out there will determine how that stock will do. So Vedant relatively is a much better company, highly cash generating, but valuations still are a bit stretched. So I think that's something which could be on the lookout to buy on corrections.
And what would you buy? A business, like they say in Hindi, अच्छा है मगर सस्ता नहीं है. Which is that company?
अच्छा है लेकिन सस्ता नहीं.
Yeah, I mean, which is that business?
To say, I'm not buying anything which is good but not cheap.
No,
I'll have to think.
Have we lost him there? Nope, I just thought I got the name. Never mind. Is he back?
No, what I'm saying is that
Sandeep Sabharwal, you should come to studio.
I'll tell you on Monday.
No, you should come to studio, and I'm going to tell this to our viewers that where Sandeep sits and where our studio is, all he has to do is just climb a wall. Just climb a wall. There's a wall. You just climb over it and he'll reach our studio. And that's good early morning exercise for you, Sandeep. You don't have to jog. You can, you can skip your squash. All you have to do, walk 500 steps, climb the wall, walk another 500 steps, you'll reach our studio. Connection will be much better.
First, you need to show the photo of the wall to everyone.
See, that's where your athleticism comes in, right? That's what you have to train for, Sandeep.
Okay, see you on Monday.
2 days he'll be able to climb the wall. That's something, Sandeep.
He's definitely being his sarcastic self. I think we'll see Sandeep right in the spot where he is right now. But yeah, always welcome to come to the studios. Okay, the pre-open rates right now and around the 18,300 mark for now. You've got the Sensex as well, which is just about flat. Let's find out those mid-cap strategies then. Given that it's been pretty much a mixed set of global cues as well coming in, what is it that our chartists are betting on when it comes to stock-specific ideas? Kunal?
So GSPL is the stock which I would be bullish on. 5 straight months of consolidation. Stock forms a bullish flag pattern on the daily charts. And I think the breakout yesterday, or the stock inched a breakout just about that 280 plus levels where it's closed yesterday. So would suggest a buy 315 as a near-term target for GSPL, and stop loss could be kept at 275.
All right, GSPL, the target at 315. Naresh, what about you?
Another gas stock, which is Gujarat Gas. The stock finally saw a move post the numbers. The stock has seen good momentum yesterday. Volumes are 5x. The stock has gone nowhere for the last almost 2 years now. Taking it as a case of a momentum built up from here on. Follow up on yesterday's move, go up towards the initial 530 mark, which is the recent highs for the last 6-8 months. So a buy on dips today, a stop loss at 465 and a target price of 530 in the short term.
All right, watch out for Gujarat Gas as well. Those are some of the top mid-cap calls. But here are the other top headlines that we're tracking. And Japanese giant SoftBank has posted a record loss, which has widened to $32 billion. Despite the tech rally in its tech-heavy Vision Fund, that posted a loss and warned that geopolitical tensions and the US-China dispute continue to pose big market risks. Meantime, India is seeking to tax the streaming giant Netflix income as per the Economic Times reports. Meanwhile, tax officials have said that the US headquartered entertainment company has a permanent establishment in India and is thus liable to get its income in the country assessed for tax. Moving on, then, Pakistan Supreme Court has declared Imran Khan's arrest illegal, ordering to release him immediately. The arrest sparked a widespread protest across Pakistan, prompting the government to deploy the army in the national capital. In response, the US has said it will continue to monitor the situation closely. Moving right on, the Apex Court has reserved the verdict on the petition seeking legalization of same-sex marriages in the country after conducting hearings for 10 straight days. The top court reiterated that it cannot ask the parliament to make a law or enter the realm of policy making. The 5-judge bench reiterated that a mere court declaration on the issue will not serve the purpose. And you've got soaring temperatures which are becoming a point of bother. The Met Department has issued yet another heat wave warning in Mumbai, along with Thane, Palghar as well as Raigad and the neighbouring districts in the Konkan regions of Maharashtra. This is the first warning that's been issued this month and the fourth this season. Mumbai has boiled at 36 degrees yesterday, a 3-degree jump in just 24 hours. Meanwhile, across to the southern region, the IMD has predicted a depression over the southeast Bay of Bengal, expected to move northwards and intensify to a cyclonic storm. NDRF has deployed as many as 8 teams and 200 rescuers in West Bengal's Digha. IMD expects the cyclone to become a severe cyclone by this weekend. All right, let's move right on then. Khabar on D Street, it's time for that. Investor Dolly Khanna's name may appear as a buyer in Ugrow Capital in the company's next filing, while PAG Fund is said to be a seller. Let's take it across then to Sharad, who joins in with all that khabar. Sharad?
Well, yes, in focus we are having Ugrow Capital, and over here D Street investor Dolly Khanna has been the buyer of the stock over the last few days. The seller has been PAG Fund. Now do remember that the name should appear in the next shareholding filing which will come in the company. Apart from this, also do remember the company will be meeting Sage One advisors and ValueQuest advisors as well. These are promoted by strong PMS fund managers, and there is an overall board meeting which is happening on May 15th, which is there for the fundraise. Apart from this, also other meetings are underway with the PMSs and HNIs. Now looking at the company itself, there are important DIs already holding position in the company, which includes SBI Life, PNB MetLife and General Digital Insurance. And looking at the stock tracking, it's almost 47% up from the March lows itself. And do remember, analysts are stating that the company might become a major beneficiary of the ONDC network. Now the company itself is a lending fintech firm, and it's backed by TPG Newcrest, and already it has raised 341 crore rupees via a QIP issue.
All right, thanks very much, Sharad, for giving us all of those details. Moving right on, let's take it right back to the editor's take. Two stocks will be in focus today, Tata Motors and Cipla, as they will be coming out with their numbers. Let's get in an in-depth analysis. Let's begin then by talking about Tata Motors and what a move it's been. Nikunj, I bet you're thumping the table saying, we told you so. But yes, 4% away from its life highs. And of course, when it comes to numbers, we'll be watching out for a lot of factors, GLR performance, dividend payout, etc. But what's the view on Tata Motors?
You know, it just could be one of those phases in the short term, when I say short term, couple of days, right, where Tata Motors actually could sell off, could see a sell off post the numbers, because the run up has been strong. Nothing in the environment has changed so dramatically, fundamentally, which really supports such a sharp move in Tata Motors. The GLR concerns are still there. They're doing very well in passenger car market that we knew a year ago. Tata IPO subsidiary IPO was coming. That's a passé 6-month-old story. They are getting market share gained in CV. Everybody knows that. All these factors were at play 2 quarters ago. Then what has changed in this quarter? It's only recognition that Tata Motors is suddenly offering that value. Now that recognition has to be always backed by numbers. So numbers will always come with a slow pace. And numbers in last 2 quarters on GLR front have been decent. We pretty much know that it's no longer the albatross, so to speak, for Tata Motors. So I don't think incremental changes will come in Tata Motors, and because the stock has seen a run up, it's a trader dominated stock. That's how the margin trajectory for GLR has moved. 6 is not going to become 8. So this bump up of 2.5 to 6 is something markets know. Little bit of disappointment here. And given the volatility in Tata Motors stock and the beta nature of the stock, you could be in for a buy the rumor and sell the news kind of a trend.
Okay, so this one is going to be closely eyed. 511 is where the stock is at. Moving on then to Pharma, Cipla in the spotlight, and seasonally it is a bit of a weak quarter when it comes to Q4. Generic US sales numbers all will be closely eyed. What are you penciling in for Cipla?
So you must look at a very different number for Cipla. And for Cipla, I think it is the India number which is important. And we've looked at all the pharma companies where India component is large. And for companies where India component is large, the India component or India business has managed to beat expectations. So India is where growth is, India is where high per capita spend on medicines is moving. The generic is now taken over by branded, and Cipla has a formidable market share. They have a formidable market share in respiratory market, the diabetes market, and also in some chronic care. So I think for me that becomes an added bonus for Cipla, where the domestic market could surprise us, unlike in case of Dr. Reddy, where the global business was under pressure. Also Mankind Pharma, 97% from the domestic market. That sets the benchmark as to how you want to value a global business. This could be the dark horse, I think, for rest of the year. I think it is expensive, so it does not get this kind of an recognition, because it's Cipla is one of the stocks because it's been consistent after the COVID bump up. So it does not get that kind of a recognition because it is not cheap. But I think gradually the way things are moving and what Umang is trying to do, you may start seeing evidence of that in this quarter numbers, and especially on the domestic front.
Okay, while we count down to the market open this Friday and the pre-open rates have settled in quiet with a shade in the red, let's see what the index strategy is coming in from our chartist this morning. And for Kunal, it continues to be a hold. Santosh Meena, though, calls it a buy. And for Naresh as well, it's pretty much a hold on the index, irrespective of that slight bit of consolidation which we're now almost seeing. So the Moodometer is pretty much a consensus call on the hold for the Nifty. What about the Nifty Bank? It's a no trade from Kunal as well as Naresh on the Nifty Bank, and Santosh Meena is still recommending a buy there. So not pretty much a consensus, at least on the Nifty Bank, stuck somewhere in the middle. Let's just see what the Moodometer on the Nifty Bank is calling it this morning. Just counting down then for the market open, and the construct of India markets, Nikunj, at least, continues to look okay. Of course, there is this fresh and renewed concern around the US debt ceiling, not new at any time, and some alarm calls coming in from Jamie Dimon from the Fed. But irrespective of that, the construct for us so far, so good.
So Aisha, while US debt ceiling, if it fails, will it be a complete catastrophe? The answer to that is no. I mean, ultimately, it will sail through. It's happened in the past. That's one. Second, the problems in the Western world are only endorsing the fact that India perhaps is the only go-to space. Now, US regional banks have gone through a problem that was handled very smartly by the US Fed. But the net impact of that entire US regional bank bailout has been that US regional banks will have to slow down growth. And if they're slowing down growth, the lending activity and the economic activity in US will start gradually slowing down. But in India, that is not the case. What is our problem? The problem in India is not low demand. It is actually high inflation, which is impacting growth per se and margins and profitability. If world slows down, inflation comes down. And if Indian banks are growing, and if cost of interest rates is going to be benign in next couple of quarters, I think that's excellent news. A lot hinges on the monsoon this year, I completely endorse that. But given the construct of the world now, I think it is evident that money which went to China is coming back, and flows which migrated out of India because of the dollar index and the interplay on relative valuation, that also is making a comeback. So I remain bullish, and I think these are the times when, if you try and overanalyze your portfolio, that what will happen to US debt ceiling and how it will impact your stock portfolio here, then that's not going to be futile. I mean, you will be forced to sell when you should not be selling. This is a time to just stay tight. This time just to believe and take a leap of faith that globally what is happening will have an impact on India, but in totality, India is going to emerge as a clear winner with these passing levels. First rates on your screen, it could be nick for the Nifty, that's perfectly acceptable. The market breadth is also not looking great, that's okay. So it may not be a good Friday, it may not be a great Friday. You want to close the week on a high note, that may not happen, but I think that's perfectly acceptable. Nobody should expect and anticipate the markets will go up in a linear line. We are up from 16,700 to 18,200, and that makes it like a near perfect market, so to speak. First rates just started coming up on the screen. FMCG index, auto index, all of them are just flat. It's an important day in Supreme Court for the Adani group of companies. The Supreme Court hearing decision is going to be there today. The hearing is also there today. So in the run-up to that decision, which is expected during the market hour in the second half of trade today, I guess you will see some fireworks in Adani group of stocks. So you will see some action in Adani group of stocks. But as of now, there is no pattern whatsoever. Nothing big came yesterday after the market hour, but Eicher Motors was strong, and that is having impact on the stock per se, which is up 4%.
Eicher Motors, yes, the margins have risen about 80 basis points, 5.5% higher now for Eicher as we speak. Kotak Mahindra Bank, let's see, after the MSCI rejig got announced, Nuvama is actually foreseeing an inflow of about $810 million because of the MSCI rejig. Kotak Bank, though, starts off a little bit tempered. Lots of other earnings, and Siemens as well came out with a strong set. The revenue is higher by about 28%. And remember, it's not just Kotak Bank, but Max Healthcare, Sona BLW, HAL. These are also the other MSCI inclusions. Max has popped up about almost 5%, Sona Comstar higher by 3%, and then there is Hindustan Aeronautics, though, which has started off with a downtick of about 0.6%. The big dhamaka earning, of course, has been Zensar. The dollar revenue has come in higher by about 1.25%, and this constant currency revenue as well is higher on a sequential basis. 2.5% higher for Zensar as we speak right now. Deepak Nitrite also came out with its numbers. Although the margins are down, the revenue is higher 5% and earnings are largely in line. The stock, though, starts off 3% lower as we speak right now. There's GSPL as well, which came out with its numbers. There's South Indian Bank, wherein the NII is up 43% on a year-on-year basis, and their NIMs are now at a record high of 3.67%. South Indian Bank, what a move on this stock, 9.25% higher for South Indian Bank as we speak right now. NBCC has bagged an order of about 1,200 odd crore rupees, and there's Interglobe Aviation as well, which is also one of the additions in the MSCI list. A couple of other names which are also in focus this morning. Let's see where L&T has settled in at after that deep gash on the stock as well as on DRL. L&T sees some more selling, 1% lower for L&T still, and DRL will just come up for you on your screens too. That also is seeing some more red, 1% lower for DRL as we speak right now. Indus Towers, Adani Transmission, Adani Total. Remember, these are the ousters or exclusions from the MSCI list, and all these stocks are in the red as we speak right now. Also, there is Dilip Buildcon, Gillette, Thyrocare, which are also going to be excluded from the MSCI small cap list. So look out for some of these names, as also Thyrocare and Vakrangi Software.
Just a quick look at Z Entertainment as well, as we understand that the merger with Sony Sony faces another bit of a roadblock as the stock exchanges have informed the Mumbai bench that SEBI has asked them to appraise the tribunal of a recently passed order on Shirpur Gold Refinery on SL Group. That's the stock down about 5%. Okay, let's move on and find out what our chartists are making of the market setup this morning. As we're just getting the initial trades going in, Kunal, what's your assessment and your first trade?
Well, it seems to be an okay start. So given the handover of 70, 75 points downtick, if you see 30 points down on the Nifty and then a positive 30 points for the Bank Nifty, we expect this to be a flattish day. As I said in the morning that we should probably swing around the 18,300 mark for a good part of the trading session. If we scale past about 18,300 levels, that could be a sign of strong breakout. The stock which I would look to trade and the one which I've been bullish on is Glenmark Pharma. Again made a new high for itself on the short-term chart, scaling past about the levels of 580 today. It looks very attractive as a short-term play.
Okay, Glenmark Pharma. Kunal continues to remain bullish on this candidate. Naresh, what's standing out according to you?
So watching out for NTPC, it is back closer to that 180 mark. If it can cross 180, that is the point I would trigger for the short term. If it crosses 180, could see a quick move. So looking to add positions above 180 out here.